You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. At Masters in Trading Live, I get on here every day the market's open, go over the market, try to add value in any way I possibly can, and then once in a while we'll even share our trade of the day. So, crazy week. We've had our first week of our Masters in Trading Challenge. Our Masters in Trading Challenge is where we invited traders to come in and learn how we approach the market. We look to buy options. The great part about buying options is before you get into the trade, you figure out what you're comfortable risking. Hey, if you want to risk $500, you know that before you get into the trade. You make the decision before you get into the trade, then you get into the trade, and then you sit back. The market's going to do what the market's going to do. You can't control the market. All we can do as traders is make decisions before we get into the market, and then take the mental side out of play. Do your work beforehand, make good decisions, put on risk. The market's going to do what the market's going to do. Okay? There's only so many things that we can control. Today, we'll go over the challenge a little bit. We have some rules that we set that it's really important to follow. When we talk about rules, it's very similar to sports. It really is. A baseball player getting up there at plate, getting up there, there's different rules that he has when there's no count. When there's 0 balls and 2 strikes, he's got different rules. When there's 3 balls and 0 strikes, that hitter has different rules at the plate, and it's about being disciplined. So traders need to figure out some rules that work for you. You want to be consistent. You don't want to keep bouncing back and forth and back and forth. You're never holding yourself accountable. So I'm going to go over a key rule that we have at Masters in Trading. I think it can really help you. All right, friends. I'm headed over to the screen to the slide deck right here. And I want to start here. Because this is just really nice. And Charles, thank you very much for sharing this. But Charles is going through the challenge right now. And the idea with the challenge, and I'll read this, almost everybody has a webinar, introduces a product and tells you all the goodies and then just sells you stuff. We've done the opposite. We want to bring you in and we want to teach you. Okay? We want you to understand. We don't want to just give you the next great pick. Okay? We want you to come in and we want you to learn. There is a learning curve. Lots of people out there teaching how to make money trading options and trading stock. We want you to come in and learn and see if this approach is right for you. So Charles, thank you so much for sharing that. That's exactly what we're doing. Plug a quick note for newbies. He's going through the challenge as well. The 5 days information is priceless. Education mitigates risk. So let's talk about rules. Here is a key rule that we have. One of the key rules that we have is if you buy an option, let's say you buy an option. Here, I'm going to go to the next slide. Important. We never sell options for less than 20 cents. Never, 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 never. June 4th. Now, what does that mean? If you buy an option for $1, okay? Let's say you buy 10. Buy 10, it's $1,000. Now, when you got into this trade, you might have got into this trade because it was 80-cent bid at $1. And maybe you decided, hey, I love this trade. I'm going to buy 10 of these. Boom. And then you get long 10. right? Well, understand that there was a 20% spread, a 20-cent spread to get into this trade. So right away, if the mid-market of this is 90 cents, you're really down 10% right when you get into the trade. If you risk $1,000, what we don't do is, if this trade is worth a dime, we don't sell for $100. And we don't only lose 900. Once you get in, we are risking principal, because you're going to lose edge getting into the trade and getting out of the trade. Okay? Options market makers love to buy options for under 20 cents. Why? Because there's not a lot of risk, right? There's just not a lot of risk. It's a dime or 20 cents. So this is a standing rule that we have in our community. Another great question somebody asked, Jonathan, if I get in there and I buy options for 20 cents, do we still not cover? Well, that's a good question. Let's say the market to get in is a dime bid at 20 cents. A trader could sell for 10 cents, or a trader could buy for 20 cents. Let's say that you're super, super bullish and you want to get long and you're confident. And so instead of just buying 10, you want to buy 100. Okay? Buy 100 for 2K. Now, if you bought 100 for $2,000, you have leveraged. Buying for 20 cents, even if it goes down to 10 cents, it's the spread alone. So you don't have that much room to play with. If you get long from 20 cents, you're all in. Because think about it, right away, if you bought for 100 for $2,000, and if you decide, oh darn it, I made a mistake, I want to get out, the quickest you can get out is selling 100 for a dime. You're going to lose 50% just on execution cost alone. Okay? Never, I promise, never. And I need you to drink the Kool-Aid, because drinking the Kool-Aid is a little bit of giving me the benefit of the doubt, because here, 0604, I put this up is why. Why do we want to do this? Well, plug yesterday, 3 months after the original discussion, and plug, I don't mean to call you out here, I just think it's a lesson, and you said it yourself that you're never going to do this again. He's in FCX. He thinks, oh no, there's no way FCX can jump from 42 to 52 in a short amount of time. So he sold his options for 10 cents. I'm going to get out. They have no chance. But what ends up happening is you give up $1,275 for just $30. This only needs to happen to a trader once for them to finally say, I will never, ever, ever do that again. Can you imagine picking up $30 and the next day it's worth close to $1,300? Important lesson. Drink the Kool-Aid. We are here to help. We are not telling you things just to tell you them. We're telling you them because it's been learned from the School of Hard Knocks. Scrappy here. Yesterday, we shared an ODTE trade for our all access. The ODTE trade is just a short-term option trade, which just said, hey, our line in the sand for the QQQs, I'll pull it up right now. Our line in the sand for the QQQs, we're going to get down to it again, is going to be right here, this 487. It's between like 486.50 and 487. That's our line in the sand. And so these guys were using that line in the sand yesterday. And if I show you the trading of yesterday, put it on 2 days just so we can see, because I want you to see how the market behaved around that crucial level. A little bit easier for you to see. Let's go 5 days and let's just look on a short-term chart. And there we go. So that line in the sand was right here yesterday. I'll take these off so you can see it more clearly. And we're going to have the same line in the sand for today. But 487.50 Thursday, we dropped down twice. And these were the trades that the guys were able to make. Now it looks like we're going to get down there again. If we do get down there, 487, 486.50, I actually think that we're going to go through, but also it's Friday. We can't expect too much on a Friday. Really, really great trade from Scrappy yesterday. Just dead color. We had a heck of a week, guys. We talked about China all week. JD got out for 200%. Bob, I got out for 300%. Also on the China news, silver popped, and then steel, Senx, popped as well. But I got to say, we have never had a testimonial like the next one that I'm going to share. This is absolutely insane. Micah here. Micah, I have to share this. I hit a home run. My editor said this wasn't just a home run. Micah is going straight to Cooperstown. He's going straight to the Hall of Fame after this. I said he. Micah may be a she. I'm sorry. I would never make this trade if it wouldn't be for this program. I bought two. Only bought two for $126, guys. Two options for 63 cents. That's $126. That $126 ended up being worth over $2,000 in 2 short days. Micah turned $126 into $2,000 plus using the advanced notice tool and grabbing PDD before it jumped from $100 to $130. So if I ever had a reason to use the Glockenspiel, it is for right now. Uno más. Bravo, Micah. Really great job. Very impressive. Lots of testimonials today, guys, because lots of love in the Discord. The craziest, another crazy one. We'll give you one more just because I am so proud of these guys. And that's going to be in all access right here. Look at this, guys. Good morning, guys. My NEO is already up. Jonathan, my whole account is allocated only to JR's recommendations. I chopped my account into 20ths, and then I chopped that amount into thirds. JR's education since June 10th has taken me from never trading a single option and overall losing 33% of my account on miscellaneous stocks over the past year. Overall, my whole account is up 26%. If you count Skype Trade, I did that. That wasn't recommended by JR, but was on advance notice. I tranched in 3 times, bringing my account up 65% since joining on June 20th. I wanted to let you know exactly what you've done for my family. Much love. Brian, thank you for sharing. I am so freaking proud of you and absolutely thrilled for you. So the whole idea, what we're trying to do at Masters in Trading is we believe education mitigates risk. Education, learning how to trade options, learning how to hedge yourself and protect yourself in case volatility spikes. Those, in my opinion, are the superpower that lets you trade in this style forever. So thank you for everybody sharing. We freaking killed it this week. We have our Masters in Trading Challenge, our second live class today at 2 o'clock Eastern Time. For everybody else, thanks for watching. You could always reach out at support@mastersintrading.com. Everybody in All Access, you guys stay. We'll be right back.